Brooke Sutherland, Bloomberg opinion columnist, is with us now. We've been talking about PG&E this morning, Brooke.
Yes, and some not great numbers coming out about these California fires. At least 31 people killed, more than 6,700 structures damaged, at least $19 billion in damages. And apart from just being heartbreaking, that represents potential liabilities for PG&E and also for Edison, which provides utility service to Southern California, where we've seen those fires in Malibu and those places. If you remember, PG&E is still dealing with a pretty significant liability overhang from those fires in Napa last year, the so-called Tubbs fire. We don't yet have a report out from investigators on exactly what PG&E's liability is there, but California has a law that says if the utility's equipment is found to have caused the fire, it doesn't matter if they were negligent or not of the safety and laws, they're on the hook for those liabilities. And those 2017 liabilities are estimated to be about $17 billion. So you start talking about, maybe another 10 from these latest fires, and you're talking about a pretty significant balance sheet hole.
There was a move last year to change that law, strict liability law, which was defeated in the legislature, but they did give them something. They said you can issue some bonds and charge your utility customers to try to pay off the bonds. Is that going to help them?
I think it will help somewhat, but there's still a pretty strict standard to be able to issue those bonds. They have to prove that they were reasonably maintaining their equipment and also that the cost would be so significant as to financially bankrupt PG&E, basically, that they wouldn't be able to pay them off with other means. And so there's still a significant number of hurdles that they have to clear here.
And you actually have a chart with you that shows sort of the damage that's been done with the utilities, not just from this, but from the last year as well. Walk us through it.
Yeah, so if we could just take a dive into my terminal here, you can see the drop in PG&E and Edison stock price, and you see that big dip around October, November of last year. Those were those Tubbs, Napa fires that I was talking about. And then you look at, this past couple of days, that other big leg down there, and the stocks have sort of been trending down ever since those fires from last year, which I think really underscores how much of an overhang this has been on the stock and how much these latest fires will continue to be going forward.
In a world where utilities should be the safety investment, right? I mean, in theory, like that just is an extra hit when that's your defensive play because of your yield, and then that happens.
Pre-climate change.
It is, and I mean, that's the utilities' pushback, though, that they shouldn't be held to such a significant standard because some of these changes are because of climate change.